Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 10th of March. Right now, as we come out of the North American session, just checking where the direction's coming from and what's happening. Okay, equity markets, big day, through the roof, right? Nasdaq up 4%. Basically, everything's sort of rallying. Dow Jones, it's sort of the odd one out these days. But that's what's happening now. Where's that coming from? Well, funnily enough, the US Treasuries have sort of started stabilizing. If anything, they've come off a touch, right? So that gives, yields lower, equities up. It's a direct relationship. So understand what's going on, because you could be sitting there just thinking, oh, well, equity markets have rallied, and that gives us a risk on, risk off profile, which is exactly what we've got here in the markets today. Okay, so risk on, the dollar block, euro, sterling, Aussie, Kiwi rally. And you've got the dollar pairs sort of falling. So what you need to know is, why are the equities going up and down? When you know that answer, trading becomes a lot easier, right? And it is the treasury market. Okay, you can see the prices here a little bit higher today. Higher prices, lower yield. Understand the relationship there, or the way the treasury bonds are quoted, and understand what impact that has. I've got the chart here where you can see the 7 year, 7-10, all the treasury bonds, and those yields have slowly dribbled off today or stabilized, which tells you this immediate run of the dollar, it's not over, right? But it is pausing for the moment. You can see we've still got dollar index support there around 91.80, and you come back over the other pairs. I think this is a chance really for a reload, right? These pairs should retrace back to their resistance levels. You can see sterling has already done it. The Aussie, well, it's testing that level, drifting sideways. It's lost momentum. To me, it looks a little bit overdone. You get the Kiwi, the exact same as the Aussie. And the dollar pairs, well, they're still going up, and we've got support levels here. Okay, actually, if anything, dollar Swiss has sort of just drifted down through that level as well. So keep an eye on this, because this is now, this becomes really entertaining. Because what we've got is, we've got the move in direction in the US Treasuries. We've got the dollar move there as well. So now what we're looking for, this is when you really bring the fundamentals back together. You're really coming back and trying to identify the next key move, right? So the Treasury markets, or the yields, the increase of yields has given us the dollar direction. It's given us clear activity here on the equity markets, and that's flowing through to the currency pairs. So everything's sort of factored in right at the moment, right where it is. And this is where the economic data comes into play. So today's US CPI numbers couldn't come at a better time, right? We've got the next big US number coming out. We've got the dollar pausing. It's either going to continue higher or lower. Of course, if the CPI numbers are exactly as expected, well, we might just see the momentum out of the dollar sort of just fade a bit, and we'll come back and have to watch the US Treasuries for direction. But the market is primed really well for a big trading activity on those US numbers. Okay, we've got technical levels across the board on most pairs. Okay, you've even got previous support level, which will act as resistance on the Aussie. Same for Kiwi. Dollar CAD is the odd pair out. I wouldn't be getting too enthralled in that just yet. In saying that, we do have the Bank of Canada rate decision and statement coming out today, so that's going to provide a bit more insight. Because there's no sort of clear expectation of a change in rates in Canada, it's going to come down to the statement and some comments from them. So expect high volatility in dollar CAD as we go forward through this session. Dollar CAD's not going to be an easy trade by any stretch, but we've got clear direction in the dollar. It's pausing. This is where those US CPI numbers can come into play. So keep an eye on your technical levels. Look for a result out of these numbers to give us direction. Now, looking at the CPI numbers, generally speaking, now the central bank, the Fed, is talking about higher or maximum employment. Of course, inflation is the other key issue. They've been saying that they're going to let inflation go somewhat, and let it go a bit higher without doing anything. But if this number's weaker, well, it means they're going to do nothing for longer. I reckon we'll see another kick higher in the Treasury yields. So stronger CPI, I think the US Treasury bonds the yield will come off a bit. That's going to lead to a slightly lower dollar. So understand the relationship with what's going on with the mechanics here, right? Usually stronger US CPI would lead to higher rates and a stronger dollar. But the fact is the treasury yields themselves are the ones that we need to focus on. So when you look at the economic numbers, right, and you look at the US CPI, you got to think, what does a strong number or weak number do to the treasuries? And that's where it'll flow into the equity markets and the currencies, right? So it's a little bit of a strange one when the treasury bonds are the directing focus. So keep an eye on that. You got to think of CPI, strong numbers. What does it do? What's the impact? What does that force the Fed to do? And what impact will that have on the treasuries? And then you come back across to the equity markets and then the currencies, right? This is the trail that you need to follow. And from there, you know, if these numbers are pretty neutral and we start to get like a few days or the rest of the week where there's no shifts in the treasury yields, well, that focus will drift off. We'll come back into the macros. We'll come back looking at the general news that's coming around and see if that starts to influence what the dollar is doing as well. But at the moment, there's not a lot of else going on. That's why this move in the dollar has been so distinct and defined, because we haven't had the fundamentals kicking in for some time. We've got clear direction here in the treasury yields. It's impacting directly on the equity markets and also the yield, high yield, stronger dollar. That's what we're expecting. Now, don't get sort of balked here that because the dollar pairs have had a day going down and the dollar block's going up, this is a natural cycle of retracement. Okay, it just doesn't go down in one straight line. So don't think that's unusual and the move is over. It comes down. You got to connect the dots with the fundamentals. We're just having a retracement. Of course, there's going to be some profit taking ahead of the US CPI numbers. It's too big a data release not to take some cash off the table, but that recharges the markets and we could see the move continue and you get in at better levels. Remember, the trend's your friend. All right, guys, that's it from me. Plenty to go on. This is where your knowledge of the markets really comes into play. So think about it, concentrate. If you don't know what's going on, you might want to start to take a look at the Advanced Forex Trader workshop on our site, because that's where the answers will be, explaining the relationship between the bonds, equities, futures, interest rates, and also what happens around when bond yields move. What's the impact and why does it impact? All right, guys, have a good one. Cheerio.